Help make sense of this topsy-turvy trading situation is Dr. Carl Bonham from the University of Hawaii Economic Research Organization. Good morning to you. Thanks for coming in. So, okay, just a week ago, U.S. stocks tanked. We lost all the gains that it had made since 2012, and then we watched Wall Street rally in the beginning of this week. So, what is going on?
Well, you know, this year stocks peaked in early April, and we'd had a couple of months of really strong U.S. jobs data. In March, we had supposedly a resolution of what was going on in Europe, and then it all sort of started to unravel with the bad jobs data for April and May, and now really things, you know, the slow-moving European train wreck is back on the front page, and it's got stock investors worried. And really what they're doing is they're running away from risk, and they're getting out of the market and largely getting into U.S. government bonds, and U.S. government bond interest rates fell below 1.5% last week. So it's really a flight to quality.
Okay. Well, I thought things in Europe and Greece were getting better. So.
Well, and the market did too. When last spring in March, the IMF, the ECB, they orchestrated this essentially a default by Greece on its debt and a bailout package, and that was supposed to keep Greece funded through June. Well, now they're telling us that because their economy is in even deeper recession with unemployment over 20%, they're likely to run out of money again. And we have a Greek election coming up. And so if the Greek election turns out poorly, they could be leaving the euro.
Well, how is that Greece is such a small country? How can it have such a large impact on the world economy?
So you're absolutely right. It's not Greece, right? It's the fear that what's going on in Greece is also going to happen in the rest of Europe. You have, global financial markets are all connected, and we've already seen Spain is in very bad situation with their interest rates have risen to 6%. They actually were downgraded yesterday. Their government debt was downgraded. Their banks are in very bad shape after a housing bubble burst. And the question is, if Greece leaves the euro, do you see a run on the banks in Spain, in Italy, in France? And how does that spill over onto U.S. financial markets?
Okay, so why the rally?
You tend to see the markets overreact to the bad news and probably overreact a little bit to potential good news. And it was really potential good news that maybe the central banks around the world are ready to act and are going to act. So far, other than Australia and China, we haven't seen an action by the ECB and we haven't seen an action by the Fed, but it's that potential that they might further stimulate the economies.
And today now they're being a lot more conservative.
Yeah, well, there's some expectation that China's rate cut might actually be a sign that things are worse in China than people thought.
Okay. All right. So hang on.
Right.
Hang on for the ride. Okay. Thanks, Dr. Bonham. Now, to find out what else the economists at UHERO are tackling and tracking, heading to their Facebook page, and you can also find a link to their website on the As Seen On section of KITV.com. All right. Thanks so much, and we'll be right back.